Good morning, everyone, and happy Monday. We're going to get started in just a minute, making sure you guys can hear me okay. Let me just rearrange a couple things here on my screen. There you go. Making sure I can see you guys' comments. Here we are. Good morning. Yeah, is the audio good? Can you guys hear me okay? Does that sound pretty good, everything here? Oh, very good. Thank you very much. Appreciated. All right, let's get started. I'm on the road for the next couple of days. We're having a team meetings here in Alabama. So if you're seeing a big different background, that is why. We are going to get started here right now. We'll just quickly, housekeeping note, for those of you guys that are new, thank you all for being here. This is our Set the Market morning call here. I'm Serge Berger from thestudytrader.com. And if you are here for the first time, what we're going to do, we're going to spend the next 10 to 15 minutes going through the top few things on our notepad here to start the week. We do this every morning, Monday through Thursday, 9 o'clock Eastern time. And if you haven't done so yet, please make sure you subscribe to our channel. Very important so that you can be updated in real time when we go live. Also, make sure you give us a thumbs up like on the videos. That really helps the algorithms being able to help us continue to make the show. So it is baseball season, so let's go with a couple of fastballs here. We're going to go pretty quickly here through the top few things. One more thing I should mention, and I'm going to start with a chart here that I think is very, very important. So what are we going to cover today? We're going to look at equities here in a second. I'm going to first start off with a very important chart. Once again, this morning, we're seeing the commodity space do very well. Palladium is once again going vertical. You guys know about my silver trade that I continue to update people with. We are doing a special webinar this week. In fact, on Thursday, is going to be my whole thesis around the very bullishness around commodities, particularly some of the copper trades and others. And if you look at this chart here, we'll start over this one. This is just a reminder that the U.S. equity market continues to trail in terms of performance. In this case, I'm tracking it against copper, silver, and gold. Silver and gold have already had moves. Gold, of course, started its move 2 years ago, 2.5 years ago. We continue to be long. I'm now long silver. Maybe thinking of adding that to that position at some point. I'll keep you guys updated in the YouTube Shorts, which I know we've gotten a lot of positive feedback about because they're quite live. And the price of copper now is really a bigger story. So we're going to get everyone up to speed on what's going on in the price of copper on Thursday in a special webinar. You'll hear about it. Check your inbox. And if we can, we'll send it. We'll put a link in here at some point as well. So we think there's the big moves that are going to happen there. So we're going to start off with equities here this morning. Then I want to remind everyone of what's going on in the bond market and how that might translate into the equity markets. And then I have a couple of specific ideas, also an update on Bitcoin, which continues to look really, really good. We're actually considering adding to that long position from a trading perspective. So let's get into it. So first of all, before we get to a couple of individual stocks, Shopify, by the way, looks great. I have an update on that stock in just a minute. But let's quickly remind ourselves where we are as far as the broader equity market is concerned. We've been saying this now for some time. We went into this, what I called what did I call it? Overhead resistance area, where basically, people got long after the election. So that's sort of up here. We're still in this area. We haven't broken above it yet. But I think at this point, given the fact that we once again have global stimulus, the Chinese, if you look at the Hang Seng this morning, if you don't do that every morning, you need to, because it's a global world. The Hang Seng this morning was up 1.6%. China continues to stimulate. There's some economic data, this is also why the Chinese markets are beating living daylights out of the S&P year to date. I expect that to continue for some time. The European indices are holding up as well for the most part. And so the way this translates into the S&P 500, for example, is that we at this point would have to make it the base case that we're more or less at 6,000 now, that we could see a match of the previous all-time high, 6,100. Now, the question, of course, is, or the risk, I should say, the risk management exercise is to understand that we could wake up one morning and we get some bad news from wherever, and that's always the case, by the way. So this is just a risk management exercise, and we gap down 2% and then consolidate, 5 to 10% for a few months or a few weeks. That's not a unique risk. That's always the possibility. So I'm saying this now because I don't think we should get levered long in too many ways in the equity market. I think there's better setups elsewhere. But again, as I said, the S&P, to me, it's absolutely possible that we get back to all-time highs. Same thing for the NASDAQ 100. So if you're coming in, you're wondering what the NASDAQ, it's the same chart, it's the same idea, it's the same stocks. There's no difference, right? But we talked about that breakout that happened a few days ago at this point. Out of this, we've talked about the bull flag patterns. If you would want to be technical about it, again, this is nothing more than global liquidity working. If you want to make this, annotate this with bullish annotations on a chart, if that helps, and I think that's good, right? Then that's great. But again, what we're having here is just a continuation of a very sharp move. So that's why I annotated it this way. We had a big move off the lows in April. Then we consolidated up until basically Friday for about almost a month, let's call it 3 weeks. And now it looks like we want to push higher, maybe get back to all-time highs. Again, this can change very quickly, but for right now, this is what's going on. So that's the sort of the big picture as it relates to the equity market. Now, let's talk a couple of individual stocks. One of the things that I'm noticing is that there's a lot of individual technology stocks outside of the big ones that we all know that are crowded, that are acting very well. So you look at something like Shopify. So to me, what's really important with something like Shopify is that there is a bullish trend. So this is our market rover, it's our trend following software, and it tells us that this is a stock in a bullish trend, which is the green background color. And it's actually now reached both profit targets 1 and 2, but we're now starting to potentially break out in a bigger fashion. We have a trailing stop in place as well, those white dots. So the trailing stop right now is around 103.40. Now, if I take a step back on this and I look at Shopify in a bigger picture chart, then I will show you also that our momentum indicator is giving us a buy signal, but this is the big picture chart of, and I say big picture, it's like a year or so. It's not that big, but for momentum, this is good enough. And we have a consolidation pattern where the stock is just, it's getting really tight, right? So basically, I think if the stock can have another decent up day, it's really on track, probably to go to 130. And very importantly to me is that our momentum indicator is giving us the same signal. So this is our TSD trend or momentum indicator. If you don't have it yet, please go get it. You need this if you're a trader because you're directionally exposed to the markets, particularly if you use options or any kind of leverage at all. You can see we had a sell signal back in February. The stock then dropped 37%, and then we got a buy signal, which remains valid at this point. We had a second chance entry. Stock is so far is up about 14%. A simple call option would probably be up about 50, 60, 70%. So, but I think there's a potential here for this stock to pop way more and get back, go up to maybe the high 120s. So if you're looking for a trade, remember anything here is educational, no recommendations or advice, obviously. But I wouldn't be surprised if we see momentum gain here on this stock. Now, again, any ugly one-day down bar on a stock like this would probably be commensurate with the broader markets, sort of bumping into some problem. But I think this is an interesting one. Any questions, let me know. I'm happy to address it in here. But this is a good one. Another one I want to put on everyone's radar, this is Adobe. Now, Adobe has earnings on Thursday, the 12th of the month. We do have a bullish momentum signal. It's also a very tight pattern if you want to be technical about it. Again, remember, technical analysis is just one way of helping us visualize what's going on in the market. It should not be the only thing that we use. That is something that I think is becoming increasingly clear to people, but it's important. We have bullish momentum. It remains a bullish trade. Again, the issue is that the company has earnings. Let me just quickly show you something in Adobe here. Now, we don't hold trades through earnings for the most part. We might buy a stock or a call as it as we move toward earnings, there's always pre-announcement risks. We're not yet there on that. We think broadly, but we don't want to hold it through earnings unless it's an investment. If I have a very bullish long-term thesis as an investor in Adobe, then I obviously would want to hold the stock. But from a trading perspective, I wouldn't. Here is just for a little bit of perspective what Adobe has done over the past few reports. So when in the June quarter of last year, which is basically the report we're about to get, the stock gapped up 14.5%. And then ever since all the other quarters, we had 1, 2, 3 earnings reports, the stock gapped down anywhere between 8 and about 14%. So now you tell me what this stock's going to do. Is it gap up or down? I have no clue. What I will tell you is that a lot of people last week bet that Lulu would gap up, and Lulu on Friday gapped down about 20%, right? So that's a real ass kicking that people got in that one. Same thing for DocuSign. If you guys remember, we had a bullish pattern in DocuSign. We did a trade, actually successfully closed it before earnings. The stock looked very sound technically, and all the amateur chart chasers on YouTube and whatever we're talking about how bullish this is. We don't hold trades to earnings. The stock gapped down 19% on Friday after earnings, right? So my point is, all these patterns are good and well, but you have no edge holding something to earnings if that's your only bet, right? So now again, there are some options plays that one can do that sometimes work, but in my experience of doing that for 26 years, the edge is really not there, right? So I just want to give you some perspective on Adobe. So that's another one that I think you could put on your radar. Again, earnings this week, we will not be holding this through earnings. We currently have a bullish momentum trade that kicked off on May 1st. Again, if you use the trender and you took this trade, you would now be up about 11% on the stock, maybe 50, 60% on some call options. So use the trender. It's an unbelievable tool. I can only recommend you use the trender every single day. All right, let's go through a couple more things. So that is S&P 500 update, NASDAQ update. We'll go to the bond market in a second. I've given you an idea on or a warning on Adobe. We talked about Shopify's bullish setup. Again, this one here does not have earnings. They had earnings about a month ago. So this one here is a bit more in the clear. We talked about the upside profit target in Shopify that I would focus on. Now what we haven't talked about yet is Bitcoin, silver, oil, and the breakouts happening there, and palladium. Okay, so let's talk about this. So what's going on in Bitcoin? I watch Bitcoin usually throughout the weekend because I want to get what is the risk appetite. And if you are receiving our Bitcoin bracket, which is a weekly report, you'll receive that in a couple of hours. Here is one way that I'm currently seeing things. Bitcoin is currently long-term bullish trend, and in the short term, it's bullish momentum, right? And what's happening right now, and we saw this throughout the weekend, Bitcoin was getting more and more bullish, and this morning it's up another 1.8% as of right now. Now, it's Bitcoin, it's volatile, it can change quickly, but if and when we clear the 112 area, it's probably 120 pretty quickly. Again, this is Bitcoin, keep it in mind. And I would say at that point, you're probably going to see Ether or Ethereum breakout as well. Ethereum has the 200-day moving average currently to contend with. I'm not quite sure if that's a coincidence or if people actually pay attention to it, but it is there. That's the red line. So if we were to break above and hold above 2,700 on Ethereum, then happy days. Now, IBIT, of course, is an ETF that tracks Bitcoin. And again, if you're going to invest or trade in IBIT, you need to be following Bitcoin, the actual underlying fundamental price, because that thing trades 24/7. So Bitcoin being up this morning should be bullish for IBIT. If Bitcoin breaks above the 112,000, then IBIT will probably go towards 70 or so before long. Now, my favorite moves, where are they? The favorite moves remain in the precious metals market. Palladium, okay? So Palladium this morning is going vertical again. Palladium over the past few days is up since we've talked about the breakout, or since we talked about, it's now up another 10%. I know no one is long Palladium, which is exactly why it's going up. At this point, it's probably getting extended, so I wouldn't be chasing it. But here's the long-term chart of Palladium. So again, if you're interested in these things, these giant moves that we're expecting in copper, particularly in some other markets, join us on Thursday in a special webinar on that. But this is the long-term move in Palladium. If you look at this in a weekly chart, you can kind of see it. So we're breaking out of an unbelievably huge base. In fact, we can make this a monthly chart, and there are ETFs on this, by the way. So this is the futures chart, but if I were to show you the ETF, I think it's PALL. I think everyone can see that this is one hell of a breakout here on a monthly chart. So if you're looking to outperform the S&P, don't trade the S&P, be long stuff that actually has tailwinds from an inflation perspective, from a big picture perspective. Portfolios are being reshuffled globally, marginally. People are, this is what we're seeing globally. It's been happening for now 13 months. Big, huge pension funds, global allocators are reallocating their portfolios. They are rebalancing, right? So just bringing a dramatic overweight in the Max 7 chart chaser names down into a more diversified set of actual portfolios, which is why something like Palladium is breaking. It's one of the reasons Palladium is breaking. It's not the main reason, but it's one of the reasons. Again, more on that on Thursday in a special webinar. So that's one hell of a move. So hopefully some of you guys are catching this. There's a lot of value here this morning, hopefully that you guys are receiving from this. And then of course silver, which I continue to mention, up another percent this morning, or 80 basis points at this point. Again, I talk about it live and through the YouTube live video. So hopefully you guys are enjoying those. And silver now over the past few days is up more or less 5%. Again, beating the living daylights out of the S&P 500, and we expect that to be kind of the theme. Now, again, these precious metals can be very volatile. They are volatile, so keep that in mind. This is not meant to be, something that has no volatility, of course, but it is. I think very telling as to what's going on globally. Last but not least, just quickly, one note, if for those people that may or may not care about the bond market. I'm set to go to a institutional investor conference down in Florida when I'm done here on Tuesday for Wednesday. What we are, one of the themes that we are supposed to talk about is the bond market. And what I will tell you, if you look at the 10-year yields on the 10-year note, 4.5%, which is kind of where we are right now, is kind of like the average price that the yield has been going back to like the early 1900s, right? So the price that or the yield that we're at right now is not like abnormally high. The bond market itself is not crazy volatile. The MOVE index, which is the VIX of the bond market, it's like going down. So real strain in the bond market, I understand the problems that people are focusing on, and it will be a problem at some point unless this gets addressed. But 4.5% in a 10-year is not catastrophically bad. Now, could the equity market have a hiccup if we see the 10-year yield break, let's say above, I think 475 is kind of like the number. Maybe it's a bit higher. But yes, it's entirely possible. I would argue maybe 480, 475. If we break above the equity market, might have a problem. But what I'm trying to say is because there's a lot of stuff going on out there on social media about bond yields being at crazy levels. 4.5% is not that high. It's just very high compared to the past 15 years of ultra low rates. But again, the past 15 years have not been normal anyway, because the equity market, as the S&P has been blowing higher at 15% annual clips. It's neither sustainable nor normal in any shape or form. And that's why you're seeing, global allocators making a lot of money. I know a lot of funds this year that are making a lot of money this year by basically being underweight the S&P and long basically almost everything else. So anyway, folks, a lot of stuff here to talk about this morning. Hope this was helpful. Please subscribe to the channel. Very important for you, so you can follow along. Let me wrap this up by showing you the chart of Shopify once again. So this is the stock we talked about before. You can be technical about it and draw some lines, but we think the breakout here in Shopify, again, we have a bullish momentum indicator reading from the TSD trender. If you use the TSD trender, and you got it, and you're probably making money on it already. But we think this could be in the high 120s, unless of course you get a big nasty bearish reversal. Please also give us a thumbs up, subscribe to the channel. See you guys back here tomorrow morning at 9 o'clock Eastern. Until then, be well. And members will be over in the Trade Ops channel. I'm going to be a bit lighter today because I've got meetings all day, but we'll be in there and see if there's an opportunity.